Good morning. Let me check the volume here and I'll be right back. Hopefully you can hear me. One moment here. Just checking the microphone here. Okay. Welcome to your daily solo 401k webinar and Q&A session with my solo 401k financial. We try to help you stop overpaying taxes and start building wealth, specifically retirement wealth. So as always, this is your chance to get answers. So use the chat. Looks like some of you have already done that to ask questions on today's topic or anything else surrounding solo 401ks and even self-directed IRAs for that matter. Type them over now so that we can be sure to get to them all. So let's get started. So today's topic is Schwab Solo 401k Mega Backdoor Roth year 2025 deadline. Here we are on December 12th. So we're coming towards the tailwind of the end of the year. But you still have time to set up a solo 401k plan for tax year 2025, especially if you're planning to utilize the Mega Backdoor Roth strategy. And many of our clients like to use Charles Schwab for the Mega Backdoor Roth Solo 401k strategy by using our plan services because it's a plan from my solo 401k financial that allows for the Mega Backdoor Roth strategy. Now, even though we're approaching the December 31st, year 2025 deadline, you technically have until your business tax return due date next year in 2026 to open and fund that solo 401k plan for tax year 2025. But why procrastinate? Why not just do it now? Because setting up the plan simply means signing the plan documents. Solo 401k plans are retirement trusts, meaning they are afforded favorable tax treatment under the Internal Revenue Service Code. So the IRS code. Now, when you open a solo 401k plan, that means signing the plan documents. That is what establishes the plan. So as soon as you sign those solo 401k plan documents, your plan is effective for tax year 2025. Therefore, you can wait till next year in 2026, buy your business tax return due date plus timely filed extension to open up the brokerage accounts, make the contributions, and so forth. So it's the actual signature of the plan documents that determines when the plan is effective. Of course, there's still plenty of time if you really want to get everything opened up and funded, but it's good to know you don't have to. And for those who are listening to this webinar in 2026 and are looking to open a solo 401k plan, well, you still have time. For example, for a sole proprietorship, you have until April 15 of 2026 to open a solo 401k plan to make year 2025 solo 401k contributions. And if you file for a tax return extension, in the case of a sole proprietorship, a personal Form 1040 extension, you're going to have until October 15 of 2026 to open the solo 401k and make Mega Backdoor Roth solo 401k contributions, also known as voluntary after-tax solo 401k contributions for the prior year, so tax year 2025. So again, today we're honing in on the Mega Backdoor Roth Solo 401k deadline. If you decide to use my Solo 401k financial and you want to use Charles Schwab to hold the funds, because even though Charles Schwab does not offer the mega backdoor Roth solo 401k, they do provide company retirement brokerage accounts for a self-directed solo 401k from my solo 401k financial that does allow for the mega backdoor Roth. And you're going to be able to invest in equities as well as alternative investments. Okay, let's take a look at some questions here and then we'll pick back up where we left off. So here's a question. I already have a solo 401k and make after-tax contributions, which are then transferred to a Roth IRA. I like to invest in private companies and venture capital funds. How do I best approach that? Also, I like to invest in property that generates rental income. How best to do that? And would that trigger UBIT? So yes, the plan that we offer here in my solo 401k financial is self-directed, meaning it comes with all the bells and whistles. So besides being able to perform the mega backdoor Roth strategy, you can also invest in alternative investments like private equity, real estate, whether it's residential, commercial, farmland, as well as cryptocurrency, precious metals, and of course, equities. It depends on who you're using to hold the funds for the solo 401k plan. So if you're using, for example, Fidelity or Schwab to hold the funds for the solo 401k plan that we offer, we do have procedures that you would follow to have Schwab or Fidelity wire those funds to the private equity investment sponsor from the solo 401k brokerage account for the plan offered by my solo 401k financial. Let me share a couple links here with you. Give me a moment here while I dig that up here. I'm going to our website. On the top right-hand corner, you can type in keywords, and it'll bring up a bunch of information surrounding that particular topic. So here's a link here with the procedure and the instructions that you would use to submit to Fidelity to process that private equity investment. And what's great about it is that you can also invest in equities, stocks, mutual funds, index funds from that same brokerage account. And also you can invest in private equity. Why? Because again, the solo 401k plan is offered by my solo 401k financial. So it's our plan that allows for those types of investments. Well, Fidelity will provide what they refer to as non-prototype brokerage accounts for a solo 401k offered by my solo 401k financial. Same with Charles Schwab. Let me send over a directive for Schwab. In case you're using Schwab to hold a solo 401k funds. Here we go. I just shared that with you. There's that link there. Also, let me share a link with the investment procedure when investing in private equity or private placement or venture capital. Take a look at that general procedure there. Also, yes, you can invest in real estate. We also have a wire directive that you would provide to Fidelity or Schwab to have the funds wired to the escrow for that real estate investment purchase. We also have real estate investment procedures on our website. You can also schedule a call and we can go over those regulations with you more. Let me send over a general link to all of our investment procedures on our website. So as you can see, we have all kinds of great information on our website. This is a culmination of all the information we've actually put together since our inception back in 2009. So we've been in business for many years. All right, good questions there. We'll look at some more questions here in a moment. Let's pick back up where I left off here regarding today's topic. So, of course, before you can even utilize the Mega Backdoor Roth Solo 401k strategy with my solo 401k financial in conjunction with Charles Schwab, you need to be eligible to open a solo 401k plan. In order to open a solo 401k plan, you have to be self-employed because a solo 401k is for solo businesses. That's why it's called a solo 401k. It's also oftentimes referred to as an owner-only solo 401k, a unit K, single K. Those are all They all mean the same thing. They all mean a self-employed 401k for those who are self-employed. If you do a quick IRS search for solo 401k, an IRS page will come up that will list on there the different terminology that's used to describe a self-employed solo 401k plan. And you cannot employ any non-owner full-time W-2 employees in your business. For example, if you're self-employed business as a sole proprietorship, you cannot employ any full-time W-2 employees who work 1,000 hours or more in your business. If you do, you would not qualify to open a solo 401k plan. However, you can always exclude anyone who's under age 21, regardless of how many hours they work. So even if that individual works 1,000 hours or more, you would still qualify to open a solo 401k plan because you can always exclude those who are under age 21. So why does this webinar matter today? Well, because one of the reasons individuals like to use the Mega Backdoor Roth Solo 401k strategy is to indirectly get more Roth funds in their solo 401k above the overall limit. Because typically with the Roth Solo 401k, you can make employee contributions, which is $23,500 for tax year 2025. Well, if you want to get more Roth Solo 401k funds in your solo 401k plan, that's where the Mega Backdoor Roth strategy comes into play. Because with the Mega Backdoor Roth Solo 401k strategy, in addition to contributing that $23,500 Roth Solo 401k contribution limit for tax year 2025, you can contribute the difference all the way up to the overall limit for tax year 2025, which is $70,000 as a voluntary after-tax solo 401k contribution, and then turn around and convert that amount to the Roth Solo 401k or even a Roth IRA. Hence, you end up with getting a total of $70,000 in Roth funds for tax year 2025 into the solo 401k plan. So by utilizing a self-directed solo 401k provider like my solo 401k financial that allows you to use your own bank or brokerage firm of choice, then you're able to basically utilize the Mega Backdoor Roth strategy. Here at my solo 401k financial, we're very popular with institutional advisors on the retail side as well, because you get to choose where to hold the money at. A lot of other providers out there will make you use them to hold their funds, or a bank that they may be associated with, or they're getting kickbacks from. Not here at my solo 401k financial. It's your money, so you should be able to decide where to hold the funds at. So even though we are the ones providing the solo 401k plan, we let you decide where to hold your money at for the plan. So we draft essentially a custom self-directed solo 401k plan that allows for the Mega Backdoor Roth strategy. Let's take a look at some more questions here. Here's a question. How do I change the beneficiary of my solo 401k to my regular trust? And when I die, will the trustee have to sell the assets immediately? Well, that's a loaded question that I could probably take it 30 minutes to go over, but here's a high level answer for you. Yes, you can change the beneficiary of the solo 401k. We can provide you with a beneficiary change form. Go ahead and submit a support ticket on our website, and we'll go ahead and provide you with that updated beneficiary election form for your completion and signature. Give me a moment here while I pull up our support ticket system. So that's number one. Number two, yes, you can name your living trust as the primary beneficiary of the solo 401k plan. Of course, if you are married, you're going to have to get spousal consent, because under the IRS regulations, by default, your spouse is the primary beneficiary, whether you complete a beneficiary form or not. The spouse default is always the primary beneficiary by default for 401k plans. Now, whether it's a good idea to name your living trust or revocable trust as the primary beneficiary of the solo 401k plan, that's something you're going to have to iron out with your estate planning attorney or tax advisor, because it might sound nice on the surface, to name your living trust as the primary beneficiary of the solo 401k plan. However, with the passage of Secure Act 2.0, regulations were changed regarding the beneficiary distribution rules. So, for example, if you name your living trust as the primary beneficiary, and then the beneficiary of that living trust is not your spouse, but rather your children, then there are going to be payout rules that come into play, such as having to pay out those funds from the solo 401k plan to that trust to that living trust over a 10-year period. Whereas if you name your spouse as the beneficiary of the solo 401k, he or she can transfer that solo 401k to his or her own IRA and continue with that IRA, and he or she will not have to deplete that IRA. Bottom line is that it may sound nice and whatever to name it trust as the primary beneficiary, but think twice about it because it doesn't always make sense. I see it the primary beneficiary typically to be the spouse, and then the living trust is the secondary beneficiary. So let me share a link from our website that talks about the beneficiary rules. Again, you can go to our main website. On the top right-hand corner, there's a search box. Just enter keywords there and hit enter, and you'll get all kinds of search results from our website. That's what I'm going to do right now. Give me a moment here while I pull up that information. Let me see if I can do a search here. I'm going to do a search for living. I'm going to do a search for living trust. All kinds of information comes up here. So if I can share one here that may be a catch-all. Well, here's one here, but again, just do a search and you're going to see that we have all kinds of good information on our website regarding the naming the beneficiary, the pros and cons, the beneficiary distribution rules upon your death. See if I can share one more here with you. Here's a good one here talking about the Secure Act impact on naming a beneficiary of the solo 401k plan. Take a look at that. Let's see if I've got some more here for you. Here's a good one here. Okay, so take a look at that link there. I mean, those links. And again, if you go to our website and search the top right-hand corner, enter keywords, you're going to find all kinds of great information specific to your topic. All right, we'll look at some more questions here. In the meantime, let's pick back up here. We're talking about the Mega Backdoor Roth Solo 401k deadline. If you want to use my Solo 401k financial in conjunction with Charles Schwab, where your business is taxed as a sole proprietorship or an LLC taxed as a sole proprietorship. So the deadline for voluntary after-tax solo 401k contributions for a business tax as a sole proprietorship, again, is actually April 15 of 2026. Or if you file a personal tax return extension when you're a sole proprietor, you're going to have until October 15 of 2026 to both open the solo 401k and make those voluntary after-tax solo 401k contributions for tax year 2025. So again, you still have time, but you can also open it now, so that way you don't forget about it next year. And again, all you have to do is just sign the plan documents, and you're going to be able to make all contribution types next year in 2026 for 2025. That is employee contributions, employer contributions, as well as voluntary after-tax solo 401k contributions. So again, we're talking about voluntary after-tax solo 401k contributions specifically. So if you wait to open that solo 401k plan in 2026, you can do so if you want to make voluntary after-tax solo 401k contributions for tax year 2025. And you can open that solo 401k plan in 2026 by April 15 or October 15 so that you can make voluntary after-tax solo 401k contributions for tax year 2025. So the Schwab and my solo 401k custom solo 401k setup. So my solo 401k financial would be the solo 401k plan provider. We would be the ones that would handle the compliance reporting upon your request. However, you can utilize Charles Schwab to hold the funds for the solo 401k plan. Again, today's webinar is specific on holding the funds at Charles Schwab for a sole proprietorship self-employed business that sponsors a solo 401k plan, but you can choose to use Fidelity Investments, Altruist. You can even use your local bank. You get to choose where to hold the funds at, in short. So here's an example of the Mega Backdoor Roth Solo 401k strategy. This is a one participant plan. So the sole proprietorship business would sponsor the plan. We would help you to open up 3 separate holding accounts, aka brokerage accounts at Charles Schwab. You are required to have separate holding accounts to track those source of funds. That's how solo 401k funds are tracked. They're not tracked on a spreadsheet or on a form. They're tracked inside the brokerage accounts for the solo 401k plan. That's why you are required to have separate holding accounts, aka brokerage accounts. So we would help you to open up 3 brokerage accounts at Charles Schwab. One to hold the pre-tax solo 401k funds, the second to hold the Roth solo 401k funds, and the third one to hold the voluntary after-tax solo 401k funds. We would prepare those Schwab brokerage forms as part of the setup process. We would fax them to Schwab for you. Schwab will send you an email once those brokerage accounts have been opened. So you don't even have to leave your office or your home to open up the solo 401k, including the brokerage accounts, when you utilize Schwab. Now, you don't have to make all these various contribution types. Obviously, if you want to utilize the Mega Backdoor Roth Solo 401k strategy, you are going to need at minimum the voluntary after-tax solo 401k brokerage account. Furthermore, if you want to convert those voluntary after-tax solo 401k funds to the Roth solo 401k, you're going to need a second brokerage account at Charles Schwab to hold those Roth solo 401k funds. Unless you decide to convert those funds to the Roth IRA instead. Keep in mind the Mega Backdoor Roth Solo 401k strategy allows you to also convert the funds from the voluntary after-tax solo 401k to the Roth IRA instead of the Roth solo 401k. However, we find most individuals convert to the Roth solo 401k plan because Roth solo 401k plans are no longer subject to require minimum distributions, which applies to those who are age 73 or older. What is more, individuals like to consolidate their retirement funds inside the solo 401k plan, so they'll convert it to the Roth solo 401k instead. Also, a lot of our clients like to invest in real estate, physical real estate, and they like to utilize debt financing, meaning that the solo 401k obtains a non-recourse loan, and then those funds are used towards the purchase of a rental property owned by the plan. If you utilize that same strategy through a self-directed Roth IRA, that's going to result in having the Roth IRA pay unrelated debt-funded income tax, which is a tax that applies when an IRA or a Roth IRA utilizes debt financing for investing in real estate, but that doesn't apply to solo 401k plans. Once you make that voluntary after-tax solo 401k contribution, then you can convert those funds to the Roth Solo 401k or the Roth IRA. Then we would issue the form 1099-R. Charles Schwab would not issue that form 1099-R. We would. But in order for us to do that, you need to complete our online conversion form, which you can find on the Forms tab of our website on the top right-hand corner. Once you fill out that online form, that's how we collect the necessary information so that we can issue the Form 1099-R to the government to report that mega backdoor Roth Solo 401k conversion. That's covered in our annual fee as long as you timely request that Form 1099-R. Keep in mind, we don't have access to your funds. So as the trustee of the plan, you need to let us know when you process these type of conversions, and so that we can have you complete the applicable conversion form so that we collect the necessary information to timely issue that Form 1099-R to the IRS. This is an example of a two-participant plan. Many of our clients are married. So, and they're both working in the same business, or they may have two business partners in the same business. Well, the solo 401k plan would be sponsored by the business, and both participants would participate in the same plan. In other words, you don't open up two separate solo 401k plans, you open one plan that's sponsored by that business because you both work in the same business. What is more, you are each required to have separate participant accounts, aka brokerage accounts or bank accounts, to hold your respective funds, as well as fund sources, that is pre-tax Roth and voluntary after tax. That's why in this image here, you see a total of 6 Schwab brokerage accounts, or it could be Fidelity or whomever you want to use, because there you have a total of 2 participants, and the plan allows for these various source of funds. And they can each process their own separate mega backdoor Roth Solo 401k strategy. So each spouse, if they have enough self-employment income, can contribute $70,000 for tax year 2025 and convert that to the Roth Solo 401k, resulting in $140,000 in Roth Solo 401k funds or Roth IRA funds if you convert those voluntary after-tax Solo 401k funds to the Roth IRA instead of the Roth Solo 401k. Okay, see if we have some more questions here. Here we go. My CPA says I will get taxed double for doing a mega backdoor Roth, but from my understanding, as long as I transfer the funds immediately to the Roth IRA, and with any earnings, I need to transfer those funds to a traditional IRA, that would be the proper way of doing this. Is there something I'm missing? I'm not sure exactly what your CPA is referring to, but keep in mind that the mega backdoor Roth Solo 401k strategy, number one, is a way to get more Roth Solo 401k funds into your plan. Number two, just like Roth Solo 401k contributions, when you make a voluntary after-tax Solo 401k contribution, you don't get a tax deduction for that contribution like you do when you make pre-tax Solo 401k contributions. So neither Roth Solo 401k contributions nor voluntary after-tax Solo 401k contributions reduce your taxable income for the year. However, the trade-off is that once you convert those voluntary after-tax Solo 401k funds to the Roth Solo 401k, now those Roth Solo 401k funds are going to grow tax-free. So you're essentially trading future free tax growth for not taking a tax deduction for that contribution by not making it as a pre-tax contribution in the year that you make it. So no, there's no double taxation when you perform the mega backdoor Roth Solo 401k strategy. Keep in mind that you want to convert those voluntary after-tax Solo 401k funds immediately to that Roth Solo 401k so that there are minimal gains. When you convert to minimal gains, let's say a couple dollars accrue, only those gains will be taxable. So in this example, you would only pay taxes on $2. The $70,000 will get converted to the Roth Solo 401k along with the $2, but you're not going to pay taxes on the $70,000 because you made it as a voluntary after-tax Solo 401k contribution, meaning you didn't take a deduction for that contribution anyways. So again, the big backdoor Roth Solo 401k is a way to indirectly get more Roth Solo 401k money into your retirement plan. Okay. see if we have some more questions here. Here's a question here. Do your day job contributions affect your maximum solo 401k after-tax contributions? The answer is no, which is great news because we have a lot of high earner clients that are professionals like CPAs, anesthesiologists, doctors who participate in the daytime employer 401k and they maximize those contributions to that daytime employer 401k. And then they have a side business and they open a solo 401k plan for their side business. And if they have enough earned income from self-employment on their side business, they can contribute the full $70,000 overall contribution limit to the voluntary after-tax solo 401k plan for tax year 2025, and then convert it to the Roth solo 401k or the Roth IRA. So in some instances, they may have contributed $70,000 in total to their daytime employer 401k, and then they're also able to contribute another $70,000 as part of the mega backdoor Roth solo 401k strategy to the Roth solo 401k, resulting in $140,000 in contributions for the year. I mean, talk about really supercharging your retirement account savings. So the only aggregation that comes into play with a daytime employer 401k is if you make employee contributions. So that $23,500 limit for tax year 2025. But if you plan to make just voluntary after-tax solo 401k contributions to the solo 401k, that's not those employee contributions or employer contributions that you make to your daytime job 401k will not impact your ability to make that $70,000 voluntary after-tax solo 401k contribution for tax year 2025. Of course, you have to have the earned income from self-employment activity to justify that contribution. Also, employer profit sharing contributions, those are also not aggregated between your daytime employer 401k and your solo 401k. It's only employee contributions that are aggregated. So you could choose to make some employer contributions to the solo 401k, and then the rest as voluntary after-tax contributions as part of the mega backdoor Roth strategy, or you can choose to just solely make voluntary after-tax solo 401k contributions up to the overall limit of $70,000, even if you've already contributed to your daytime employer 401k up to the overall limit. So yes, it's a great strategy that a lot of individuals out there are not aware of. But the cat's beginning to come out of the hat, I've noticed the last few years. By way of background, we were actually the first in the industry to provide the mega backdoor Roth strategy starting back in 2013. So we've processed thousands of these for our clients, and I would say at least 15% of our client base are those that have a daytime job 401k, and then they also have a solo 401k, and they utilize the solo 401k for the mega backdoor Roth solo 401k strategy, even though they're also maximizing contributions to their daytime employer 401k. So a good question. Let's see here. We'll come back here and take a look at some more questions here in a moment. So again, when you're making contributions to a solo 401k, whether mega backdoor Roth solo 401k contributions or any other type of contribution, you have to have earned income to justify the contribution. So today we're honing in on sole proprietorships. So if you are a sole proprietor, then you're going to need to utilize line 31 of that Schedule C. That's going to be the starting figure for the solo 401k contribution calculation. Here we also talk about S Corps. If it's an S Corp, you're going to use box 1 of your W-2. If it's a partnership, you're going to use line 14, code A of the Schedule K1. But again, we're holding in on the sole proprietorship. So first you got to identify the net profit, which is identify on that Schedule C for a sole proprietorship. So you might receive a 1099 NEC, then you got to transfer those figures over to the Schedule C. Then you're going to look at line 31 of the Schedule C. That's the net income figure. That's going to be the starting figure for the calculation. We have a calculator on our website. You would plug in that line 31 to the calculator, to the Solo 401k contribution calculator on our website. Our website calculator will then reduce that line 31 by 1/2 of self-employment income tax. That difference is the amount that you can contribute all as a voluntary after-tax solo 401k contribution. I'm going to give you an example here in a few minutes. So if you have enough self-employment income, you're going to be able to contribute $70,000, which is the 415C overall limit for tax year 2025, as a voluntary after-tax solo 401k contribution, and then turn around and convert it to the Roth solo 401k or the Roth IRA. So keep in mind that you can never contribute catch-up contributions to the voluntary after-tax solo 401k bucket. In short, catch-up contributions are never allowed to be used as part of the Mega Backdoor Roth solo 401k strategy, but that's okay. Why? Because you can contribute that catch-up contribution directly to the Roth solo 401k plan. So one strategy is to contribute the entire overall limit of $70,000 to the voluntary after-tax solo 401k bucket, and then convert it to the Roth solo 401k bucket or the Roth IRA. And then the catch-up amount, if you have enough net self-employment income, that $7,500 would flow directly into the Roth solo 401k bucket, aka brokerage account, if you utilize Charles, Schwab, or Fidelity, for example. There's the super catch-up contribution, which became effective for tax year 2025. That's $11,250, but it only applies if you're age 60, 61, 62, or 63. So you would contribute $11,250 as a super catch-up contribution, and that can go directly to the Roth solo 401k bucket instead of the $7,500. But the punchline here is the Mega Backdoor Roth solo 401k strategy only allows for that annual contribution limit of $70,000 for tax year 2025. It doesn't allow for the normal catch-up or the super catch-up. So for 2026, the contribution limits increased. So instead of $70,000 as the overall limit, you can contribute $72,000 as a voluntary after-tax solo 401k contribution, and then convert that to the Roth solo 401k or the Roth IRA. The catch-up contribution, the normal catch-up increased by $500 to $8,000. The super catch-up stayed the same at $11,250. Here's a good example of the normal catch-up and the super catch-up contribution. So take a look at that slide there. Right now we're honing in more on tax year 2025, but I thought I would include these couple slides here. You can go to our website and you can view these as well on our website. But it just kind of gives you an example of how the normal catch-up, that is the $8,000 versus the $11,250 for tax year 2026 works. Let's take a look at some questions here, and then we're going to go over the magic number for maximizing the Mega Backdoor Roth solo 401k strategy for a sole proprietorship self-employed business for tax year 2025. I can probably be on here all day long this time of year. Okay, let's see. It looks like we have all kinds of questions lining up here. Here's a question. I have a SIP IRA over $250,000 at Raymond James. I've done the research and have decided to roll that into a solo 401k. My financial advisor at RJ uses an outside TPA who says they might not be able to open a solo 401k by end of the year when their fees are quite high. Can I set up a solo 401k plan through you and take it to Raymond James or roll over my investment into the new solo 401k? The answer is yes. We actually have a lot of Raymond James advisors that utilize our solo 401k plan for their clients. And yes, you're going to be able to use Raymond James to custody the funds. I can't remember which broker dealer they use, but they may even have their own broker dealer. But yes, you'll be able to essentially open the solo 401k plan with my solo 401k financial. So we would be the plan document provider. And then we would shepherd your advisor on how to open up those brokerage accounts at Raymond James in the name of the solo 401k offered by my solo 401k financial. And then my solo 401k financial will handle the reporting going forward, such as the Form 5500 Easy, the Form 1099-R reporting, and the plan updates. So we have a lot of clients that utilize their advisor. So most of our business is on the institutional side, whether it's Fidelity advisors, Schwab advisors, independent advisors, LPO is another big one, altruist. You get to choose where to hold the funds at. And yes, you can easily meet the December 31st, year 2025 solo 401k deadline. Keep in mind that all you need to do by December 31st is sign the plan documents. It's the signature of the plan documents that determines when you adopted the plan. It's not when you make the contributions or open the holding accounts. Yes, you still have time to do all that now if you want to, but you could actually wait till next year in 2026 to open up those brokerage accounts and make those contributions for tax year 2025, whether it's employee contributions, employer contributions, or voluntary after-tax solo 401k contributions. You just need to sign the plan documents. That when you sign the plan documents, which are legal documents, that's what determines when the plan is effective. And yes, you'll be able to invest in equities at Raymond James. You can even borrow from the solo 401k plan through a solo 401k participant loan, as our plan allows for it. So good question. Let's see here. So if this information is helping you feel more confident about your future, we would appreciate it if you could take 1 second to subscribe. It tells the community that you find this content to be valuable, and it helps other solopreneurs like you to find it. So it helps spread the word out to the industry regarding how solo 401k plans work. Now, as far as your SIP IRA, that SIP IRA can be transferred to the solo 401k now, or it can be transferred next year in 2026 as well. Also, you can have both a solo 401k plan and a SIP IRA at the same time. You just have to be aware of the aggregation contribution limits between the two. So keep that in mind. Okay, let's look at some more slides here, and then we'll come back and take a look at some more questions. So let's find your magic number for a business tax as a sole proprietorship where you want to utilize the Mega Backdoor Roth Solo 401k strategy for tax year 2025. Also, we've performed other webinars on the other entity types, such as an S-Corp self-employed business, partnership self-employed business. You can view our YouTube channel where we have over 1,000 webinars for all the past webinars that we've put on. So the magic number for a sole proprietorship, you're going to need at least $75,322 of line 31 of the Schedule C for someone who's under age 50. If you report at least $75,322 of line 31 Schedule C self-employment income, you're going to be able to contribute a $70,000, which is the overall limit for 2025, as a voluntary after-tax solo 401k contribution, and then convert it to the Roth solo 401k. You can also chop up that $70,000 how you wish, for the most part. So you could choose to make a $23,500 Roth employee contribution, and then the difference as a voluntary after-tax solo 401k contribution. You can also choose to do some profit-sharing contributions, some employee contributions, and some voluntary after-tax contributions. Keep in mind that employer profit-sharing contributions are a percentage test. So you would multiply the net self-employment income figure by 20%. So you would multiply that $70,000 by 20% if you pay yourself at least $75,322. You would multiply that $70,000 by 20%, and that would be the amount of employer profit-sharing contributions you can make. But in total, between all these sources, if you're under age 50, you cannot contribute any more than $70,000. That's the overall contribution limit. The next line there is for the normal catch-up contribution, someone who's over age 50, but under age 60. you're going to need at least $83,392 of line 31 Schedule C income to maximize your contributions. For example, you would be able to contribute $70,000 to the voluntary after-tax solo 401k bucket and then convert that to the Roth solo 401k. You could contribute that $7,500 catch-up directly to the Roth solo 401k. The final illustration there is for someone who qualifies for the super catch-up contribution because their age is 60 to 63. That individual is going to need at least $87,427 of line 31 Schedule C income. That would afford that self-employed individual to contribute $70,000 as a voluntary after-tax solo 401k contribution for tax year 2025, and then convert it to the Roth solo 401k or the Roth IRA, and then they could contribute that super catch-up contribution amount of $11,250 directly to the Roth solo 401k plan. So that's a good slider to keep in mind. So we oftentimes get the question, why can't I do this at Schwab? Well, mainstream brokers don't allow for it. It's because they've made a business decision, and I don't blame them. It's a lot of work to offer a plan that has the mega backdoor Roth solo 401k strategy, because you got to make sure you educate individuals on it. I mean, we do daily webinars every day, and it seems like we cover the mega backdoor Roth solo 401k strategy every day. We're constantly fielding emails. We're constantly talking to clients about the rules. We handle the reporting. Why would a brokerage firm want to offer that where they don't make any money doing that? They make money off of your deposits. So that's probably the reason why these big brokerage firms don't want to deal with it. I mean, they had actually stopped a line for Roth solo 401k contributions, but they ended up allowing for them starting this year and last year, both at Fidelity and Schwab. And that's probably because starting next year in 2026, if you want to make catch-up contributions, you're going to have to make those as Roth solo 401k catch-up contributions. You won't be able to make them as pre-tax solo 401k contributions. That doesn't affect all solo 401k plans, just those where your self-employed business is taxed as an S Corp or C Corp. And if your box 3 of your W-2, which is your Social Security wages, is $150,000 or more as of the prior year, you're going to be forced to make those normal catch-up and super catch-up contributions as Roth solo 401k catch-up contributions. Well, Fidelity and Schwab they basically had their arms twisted to have to offer the Roth solo 401k, because if they didn't, none of their clients would be able to make any catch-up contributions. So yes, most broker dealers don't want to deal with the mega backdoor Roth solo 401k strategy because they don't make any money off it by supporting it. They know that they're the ones holding the funds. That's how they make their money. And they're okay with that by having a company like my Solo 401k Financial, who's been processing the mega backdoor Roth solo 401k strategy since 2013 to continue to do it. So we get that question quite a bit, especially from advisors. Okay, let's see if we have some more questions here. Here we go. We have a small family business structure as an LLC partnership made up of 3 owner partners without any employees. We are interested in establishing a solo 401k for a partnership to include all 3 partners. Excuse me, my mouth's getting dry here. Prior to December 31st deadline, is my solo 401k able to help with this? We are. There's still plenty of time. It's only December 12th, 2025. And as I mentioned earlier, all you need to do by December 31st is sign the plan documents, which we provide the same day. And as soon as you sign those plan documents, your plan is effective. Therefore, you can wait till next year in 2026 to both open the holding accounts and make all contribution types: employee, employer, and voluntary after-tax solo 401k contributions. So bottom line is you don't need to open the brokerage accounts or bank accounts now. You just need to simply sign the plan documents. When you sign the plan documents, that makes the plan effective. There's still time if you want us to help you open up the bank or brokerage accounts here in 2025, but it's good to know that you don't have to. So yes, the solo 401k plan offered by my solo 401k financial, we open it for all types of self-employed business, whether it's a sole proprietorship, partnership, S corporation, C corporation. What matters is that you're self-employed. And yes, you need to make sure that you do not employ any non-owner full-time W-2 employees. So in your situation, it looks like you do not, so you would qualify. You also need to make sure that you don't own any other business that employs any full-time W-2 employees, as doing so could run afoul with the control group affiliated service group regulations. Okay, good question. Let's see if we have some more here. One moment here. Okay, so here's a question here. For my solo 401k set up through Fidelity Brokerage, are there any additional setup maintenance fees with Fidelity? Will investment choices and expenses ratios be the same as they normally are with regular individual Fidelity Brokerage accounts? Great question. So our clients get to choose where they hold their money at. Neither Fidelity or Schwab will charge you any additional fees. Actually, they'll even provide what they refer to as commission-free trades. So keep in mind that Fidelity is holding the funds and they make money off of your funds through deposits. So they'll gladly hold on to your funds. So neither Schwab nor Fidelity will charge you any additional fees. And it's a self-directed brokerage account, meaning you're going to be able to invest in equities, exchange traded funds, CDs, bonds, any type of equity. But you're going to gain the option of having the Mega Backdoor Roth Solo 401k strategy, just like you would if you used Charles Schwab. And you'll also be able to borrow from the Solo 401k plan through a participant loan, invest in alternative investments as well, and of course, utilize the Mega Backdoor Roth Solo 401k strategy, for example. Let's see here. Give me a moment here. Trying to get to these questions here. Here's a question here. Say I stop being self-employed. Can I keep the solo 401k or do I have to shut it down and find a custodian for the investment? So once you stop being self-employed, the regulations require that you close the solo 401k plan. Why? Because in order to have any type of 401k, you have to have a business. For example, let's say you work for Walmart and you leave Walmart and you've been participating in the Walmart 401k. When you separate from service from Walmart, that doesn't mean that Walmart is closing its doors. So the Walmart 401k plan continues whether you continue to work for Walmart or Best Buy and separate from that employment. With the solo 401k plan, if it's your self-employed business and you're no longer self-employed, then the plan has to be closed down because you no longer have a self-employed business. In short, you cannot have a solo 401k plan without a self-employed business. So in that case, you would have to close the plan down because of the IRS regulations, and you would have to transfer the funds to a self-directed IRA or to an IRA and a self-directed IRA, and then we would help you to formally close that plan with the government by filing the applicable Form 5500 Easy and Form 1099-R to close the plan with the government. Okay, we'll look at some more questions here in a moment. Let's continue here with our presentation today, which is the Mega Backdoor Roth Solo 401k deadline using my Solo 401k financial in conjunction with Charles Schwab. So we already went over this slide here. We actually went over this slide already about how you can contribute to both a solo 401k plan and your daytime job 401k. Common mistakes to avoid when utilizing the Mega Backdoor Roth Solo 401k strategy is assuming that if you open a solo 401k plan with Schwab, then you're going to be able to utilize the Mega Backdoor Roth Solo 401k strategy. We talked about how a solo 401k from Schwab does not allow for the Mega Backdoor Roth Solo 401k strategy. But if you open up a custom solo 401k plan with my solo 401k financial, that allows for the Mega Backdoor Roth Solo 401k strategy, you can use Charles Schwab to hold the solo 401k funds for the plan offered by my solo 401k financial. And we would help you with that Mega Backdoor Roth Solo 401k strategy and conversion. And also waiting until tax time to adopt the plan. Again, if you're a sole proprietorship, you technically have until April 15 of 2026 to open and fund that solo 401k plan for tax year 2025 for making voluntary after-tax solo 401k contributions as part of the Mega Backdoor Roth Solo 401k strategy. If you file that personal tax return extension, the Form 1040, because you're a sole proprietorship, then you would have until October 15 of 2026 to open and fund the solo 401k for voluntary after-tax solo 401k contributions for tax year 2025. But again, why wait? You can just go ahead and do it now so you don't forget about it. But if you listen to this webinar on January 1st of 2026 or after, it's good to know that no, you have now missed the Mega Backdoor Roth Solo 401k strategy for tax year 2025, as you have until your business tax return due date, aka Form 1040 extension, plus extension to both open and fund that voluntary after-tax solo 401k plan for tax year 2025 and 2026 if your self-employed business is taxed as a sole proprietorship. So you definitely want to make sure you set the plan up to meet the deadline. So the first step is to adopt the solo 401k plan. Again, it's the adoption, the signature of the plan documents that determines if you meet the deadline or not. Then we will help you to open up the Schwab brokerage accounts so that you can perform the Mega Backdoor Roth Solo 401k strategy. You can begin making 2025 solo year 2025 solo 401k contributions in 2025, or you can do it in 2026 by the business tax return due date plus timely filed extension. And then you can convert from the voluntary after tax to the Roth Solo 401k. Another thing to understand is that I get this quite a bit. Don't mix up the contribution rules with the conversion rules, specifically the deadlines. Keep in mind that contributions have separate deadlines than conversions. What the heck does that mean? Well, let me give you an example here. Let's say you want to make a solo 401k contribution for tax year 2025. You have until 2026 to make that contribution by your business tax return due date plus timely filed extension. The conversion itself, that conversion doesn't have to happen in 2025, specifically if you're doing a Mega Backdoor Roth Solo 401k conversion. Now, if you're trying to convert pre-tax solo 401k funds, that's a whole different topic. Yes, you need to do that by December 31st of 2025 if you want to count it for tax year 2025. But if you're trying to process the Mega Backdoor Roth Solo 401k conversion, you don't need to do that in 2025. You can do that in 2026. So you would convert the funds from the voluntary after-tax solo 401k funds to the Roth Solo 401k in 2026. It's not going to be a taxable event because they're voluntary after-tax funds. And that's not going to impede your ability to also process another Mega Backdoor Roth Solo 401k conversion for tax year 2026. You could result in processing two Mega Backdoor Roth Solo 401k conversions in the same year. You may end up processing one in 2026 for 2025, one in 2026 for 2026. They're both going to be reported on the same 1099-R if they're both done in 2026, but it doesn't matter because it's all after-tax funds. So don't go around like a chicken with a head cut off trying to meet the December 31st solo 401k Mega Backdoor Roth Solo 401k deadline, as you have plenty of time. Enjoy your holidays. Let us be stressed out over here doing the work. That's what we're in business for. Okay. So next steps, it's best to adopt the solo 401k plan by December 31st of 2025 so you don't forget about it. Again, that simply means you need to sign the plan documents. Solo 401k plan documents are retirement trust documents. They're legal documents. It's the signature of those legal documents that determines when the plan is effective. It's not when you open the accounts or fund the accounts. That can be done next year. If you forget to do it this year, that means you forget to adopt the plan. You can do it next year if you're a sole proprietorship by April 15 of 2026 or October 15 of 2026. And you're still going to be able to make voluntary after-tax solo 401k contributions for tax year 2025. So that's how it works. See if we have some more questions here. Let me scroll down here and see if I can find some more. Provide a link to book a call with one of your agents to discuss. Certainly. Keep in mind, this is the busiest time of the year for all institutions. So you may not be able to schedule a call till next week. But you're certainly welcome to ask your questions now on today's live webinar, like I've been answering questions. But yes, during December, that's the busiest time of the year for all institutions. Here's a link here where you can book a call. All right, let's see here. Let's take a look at some more questions here. Here's a question here. Do you have any recommendations for tax professionals who handle returns that involve the solo 401k with the mega backdoor contributions? You can send us an email and we'll be happy to look for some on our network. But keep in mind that it's my solo 401k financial that would actually perform the reporting for the mega backdoor Roth solo 401k strategy. So you technically don't need your CPA to perform that. You can if you want, but most CPAs out there will refer you back to us to issue the Form 1099-R to report that mega backdoor Roth solo 401k conversion. Keep in mind that the mega backdoor Roth solo 401k strategy is not reported on your business tax return. Instead, it's going to be reported on the Form 1099-R. Now, here is my solo 401k financial. Besides being the solo 401k plan provider, we also include a host of other services in our annual fee. So we don't charge extra for these additional services. So the Form 1099-R reporting. A Form 1099-R, it's used to report to the IRS when you process a distribution from your solo 401k, whether it's a hardship distribution, a require minimum distribution, or a normal distribution, or if you process conversions. If you convert pre-tax solo 401k funds or voluntary after-tax solo 401k funds as part of the mega backdoor Roth solo 401k strategy to the Roth solo 401k or the Roth IRA, we'll issue that Form 1099-R. A copy is provided to you and a copy is filed with the IRS. As long as you timely request the Form 1099-R, we'll go ahead and prepare it for you. Same thing with the Form 5500 Easy. That's an informational return that applies to a solo 401k plan once the market value of that solo 401k plan is greater than $250,000 as of the end of the plan year. For example, if the value of your solo 401k plan is greater than $250,000 as of December 31st of 2025, then a Form 5500 Easy would need to be filed with the government by July 31st of 2026. We'll prepare that and file it electronically with the government as long as you timely request it. Keep in mind, we don't have access to your funds, so you need to communicate to us when you perform these type of transactions so that we can make sure to perform the required reporting to help keep your plan in compliance. And again, we don't charge additional fees for these services as long as they're timely requested. Let's see if we have some more questions here. We're about done here. Here's a question here. Does the voluntary after-tax need to be done through payroll and reflected on the W-2, or can I take a distribution from the business and then make the deposit from my personal account? Would this be allowed? Yes, that's allowed. Most of our clients don't utilize payroll for making contributions to their solo 401k. That's typical of more traditional 401k plans. With the solo 401k plan, you can make contributions to the plan in one lump sum. Many of our clients don't make contributions to the solo 401k plan until their business tax return due date plus timely filed extension. For example, if you're making tax year 2025 solo 401k contributions and your business is taxed as an S corporation, you can wait to make those employee, employer, and voluntary after-tax solo 401k contributions in tax year 2026 by your business tax return due date plus timely filed extension. Because this is a self-employed solo 401k plan. It's not a traditional 401k. Traditional 401k meaning one offered by a full-time employer business. This is an owner-only plan for solo businesses. Therefore, whether the contribution flows through payroll or your personal bank account after you've paid your you've been paid the W-2 wages, it doesn't matter. What matters is that you have the required box 1 W-2 wages, the gross wages, to support that contribution. So good question. Is the annual fee calendar year or charged upon a calendar anniversary date? It's not calendar year. For example, if you open a solo 401k plan with my solo 401k financial here in December, we would invoice you for the annual fee starting December of 2026. So the fee of $650 would cover the setup fee in the first 12 months. So if you open a solo 401k plan with my solo 401k financial here in December, you would pay $650, and that would cover the setup in the first 12 months from December of 2025 through December of 2026. And then we would invoice you next December of 2026 for the following 12 months. I am 69 years old. Can I take distributions or make rollovers from pre-tax 401k to traditional IRA, after tax to existing personal Roth, and after tax to Roth to personal existing Roth IRA? Yeah, since you are of retirement age, which means you're age 59 and a half or older, you can take distributions from the plan, or you can even transfer funds out of the plan to an IRA, whether you're transferring it to the Roth IRA or a traditional IRA. Same thing with conversions. You can convert pre-tax solo 401k funds to the Roth IRA, or you can convert voluntary after-tax solo 401k funds to the Roth IRA. And we would handle that reporting on the Form 1099-R. If you go to our website on the top right-hand corner, there's a Forms tab. Let me share that tab with you here. that link there, we have links to all our forms, whether conversion forms, distribution forms, Form 1099-R requests, Form 5500 easy requests. Take a look at that link there. Again, here is my solo 401k financial. We handle the ongoing compliance reporting at no additional cost, as long as you timely request it. That's why we have so many solo 401k accounts, because we include everything in our annual fee. Keep in mind, the purpose of our solo 401k annual fee is for being the plan document provider. In order to open a solo 401k plan and continue with the solo 401k plan, you're expected by the IRS to have a solo 401k plan document provider. It's the solo 401k provider that handles the plan updates, whether amendments or full-blown cycle restatements. You cannot do that yourself, in other words. You got to do it through the solo 401k plan document provider. Give me a moment here. Here's a question here. Can amounts from a Roth IRA to the solo 401k Roth, if allowed, are there negative implications? Good question. No, you cannot transfer a Roth IRA to the Roth solo 401k. I know that there are some pending bills out there introduced by some senators recently, where they're trying to change that rule to allow for the transfer of a Roth IRA to the Roth solo 401k. They've been trying to do this for many years, but maybe under the Trump administration, they'll be able to pass a bill that will allow for the transfer of Roth IRAs to the Roth solo 401k. So it's not a Roth solo 401k restriction, it's a Roth IRA restriction. If you look at IRS publication number 590, which is the publication for Roth IRAs and other IRAs, you're going to see language that specifically says that you can now transfer after-tax IRAs to a 401k. And of course, a Roth IRA is made of after-tax funds. So as a result, as the law currently stands, you cannot transfer a Roth IRA to the Roth solo 401k plan. How to set up the auto deduction to get $1,500 tax credit. Can, in addition to get the tax credit for the first year account setup, would you help filing the IRS Form 8881? Good question. Let me get to my auto contribution credit slides here. So, what is the $1,500 auto contribution credit? Now, don't confuse the auto contribution credit with the tax credit. They're different. The tax credit does not apply to solo 401k plans. However, the auto contribution credit does apply to solo 401k plans. I know you're probably scratching your head, and rightfully so. I know a lot of CPAs and financial advisors are not aware of this, or they confuse the auto contribution credit with the tax credit. So we went ahead and put together an article that compares both. Take a look at that article right there and share that with your CPA, because some CPAs are not aware and they are mistakenly advising their clients that they do not qualify for the auto contribution credit because they are confusing it with the tax credit. That article right there does a good job of comparing the two. So the auto contribution credit is a $1,500 credit. It's essentially a government stimulus where they want to get self-employed individuals to start saving for retirement before the Social Security fund runs out in this country. And what's great about the auto contribution credit is that it's a dollar for dollar credit, which reduces your business taxable income on a dollar for dollar basis. We can add this auto contribution credit to your plan. We automatically add this auto contribution credit to new plans. It wasn't available till January 1st of 2024. We were actually the first ones in the industry to offer it, just like we were the first ones in the industry to offer the Mega Backdoor Roth Solo 401k strategy. Now we're finding that more providers out there are starting to offer it. So you got to utilize a plan that has the auto contribution credit built into it, and the plan for my solo 401k financial does. What is more, you're not required to contribute to the plan in order to qualify for it. Yes, you heard that right. Even though it's called the auto contribution credit, you're not required to make contributions to the plan. You are required to have a plan that allows for it, though, along with the applicable schedules. So you can opt out of contributing, and you're still going to be able to claim the credit, and you're still going to be able to contribute up to the overall limit if you choose to, or a lower limit. In short, you're not required to make annual solo 401k contributions in order to qualify for the auto contribution credit. You're going to file Form 8881. It's a 2-page form. If you use a tax preparer system like TurboTax by Intuit, it's very easy to complete it there. We actually have on our My Community, we've got a whole forum that talks about filing it. We don't prepare the Form 8881 for you. It's an attachment to your business tax return. However, we do have a video walkthrough and a PowerPoint walkthrough that you can follow or share with your CPA. You're going to file that Form 8881 a total of 3 times, once per year for 3 consecutive years. You claim $500 each year over a 3-year period for a total of $1,500. So take a look at that. Okay, let's see here. We've been going on for about 1 hour and 15 minutes now, so we're about to be done here. See if we have some more a few questions we can get to here. We'll be back live again here next Monday. We go live at least once every day at 10 a.m. Pacific time. Oftentimes twice a day, but during the busy December season, we typically just go live once a day. That's what happens when you wait till December to open your solo 401k plan, for all you procrastinators out there. No, I'm just kidding. I know when you're self-employed, you're busy running your business. You oftentimes take care of your own business matters after you've taken care of everybody else. So believe me, I know the feeling. But again, all you need to do is sign those solo 401k plan documents by December 31st, and your plan will be effective for tax year 2025, and you can wait till next year in 2026 to open up the bank accounts, brokerage accounts, and make the contributions, whether employee, employer, or voluntary after-tax solo 401k contributions. So it's when you sign the plan documents that determines when the plan's effective. It's not when you actually open the holding accounts, aka a bank or brokerage accounts. All right, let's see if we have some more questions here. Is Schwab a recommended broker? Great question. No, today's webinar is Mega Backdoor Roth Solo 401k using my Solo 401k in conjunction with Charles Schwab. We've actually done other webinars using Fidelity, for example. So here at my Solo 401k Financial, we're a very popular Solo 401k plan provider because you get to choose where to hold the money at. The funds for the solo 401k plan can be held at Schwab, Fidelity, Altruist. You get to choose. It can be your local bank. So at the end of the day, we don't recommend any particular firm. We're here to educate you on your options out there. Does the employee contribution have to be maxed out before contributing to the voluntary after tax? Good question, and no. You can choose to solely make voluntary after tax solo 401k contributions and forego making employee and employer contributions. Likewise, you can choose to just make employer contributions as well as voluntary after tax solo 401k contributions. You can also choose to make some employee contributions, some employer contributions, some voluntary after-tax solo 401k contributions. In short, you just need to make sure you have the necessary self-employment income to justify the contribution, and make sure you don't contribute past the overall annual limit. I am the sole owner and employee of an S corporation and would like to open a solo 401k for Roth contributions. Can I fund the employee portion from my personal checking account? Does the employer portion get funded from the business checking account? You can fund the employee and employer contribution from your brokerage account or your personal bank account. Yes, you heard that right. What matters is that you have the W-2 wages to support the contribution. Whether the contribution flows from your personal bank account or the business brokerage account doesn't really matter, because it's the W-2 that determines whether or not you have the necessary self-employment income, in this case, W-2 wages from your S Corp to support the contribution. Now, when you go to report the contributions, that's a whole other matter. You're going to report the employee contributions on your Form 1040. The employer contributions are going to be reported on your Form 1120S. As a matter of fact, let me share a link from our website that talks about where to report annual solo 401k contributions. We have a good post out there. We've actually done a webinar on this topic as well. So subscribe to our YouTube channel and you can access all our webinars and you can receive notifications of when we go live. So I'm going to share a link about reporting contributions. So here's a link of how to report contributions on your business and or personal tax return. That's going to be driven as to how your self-employed business is taxed, whether it's taxed as a sole proprietorship, S Corp, or partnership, for example. So that's a really popular link on our website. There's even a video on there that talks about it, as well as graphics outlining exactly the line numbers as to where to report those contributions. So yes, we have pretty much everything covered here. Having been in business since 2009, we've had a lot of years of experience, and we've built a very good catalog of videos and a very robust website. We also have a My Community with over 32,000 members. It's free to join. If you're a financial advisor or any type of professional, you can join and post guest blog posts so you can flex your knowledge to those 32,000 plus eyeballs and even link it back to your website. And these individuals may reach out for some of your services. We actually had an individual comment earlier today if we knew of a CPA that understands the mega backdoor Roth. If you visit our community, you're going to find over 1,000 members that are professionals that are listed on our My Community, and you can reach out to them for their services, whether it's financial advice, tax advice, estate planning. We had a question earlier about naming your trust as the beneficiary. There are professionals out there in that community that can specialize in drafting those plan documents, or excuse me, those estate planning documents for you. Okay, let's see here. Can I get the loan once I move the IRA to a solo 401k? My goal is to get a loan of $50,000 to buy a business. Yes, you can. We'll prepare the solo 401k participant loan documents, for example. If you utilize Schwab or Fidelity to hold the solo 401k funds, it's our plan that allows for the loan. So we would draft those plan documents. We would provide you with the form to submit to Fidelity or Schwab to have those funds wired to your personal bank account for that participant loan. You can borrow 50% of your total balance, not to exceed $50,000. Therefore, if you want to borrow the maximum amount of $50,000, you're going to need at least $100,000 in your solo 401k plan. So great questions. If I open 2 accounts, do I get double the tax credit? No, you do not. It's only on a per plan basis. Wouldn't that be nice? For me and my wife, no. Even if your wife has her own separate business and you have your own separate business, it's only one auto contribution credit. Would the 1099-R be the only document we would need to keep as records for the contribution? If we're talking about the Mega Backdoor Roth Solo 401k contribution, keep in mind that the record is going to be also when you make the contribution to the brokerage account for the Solo 401k, whether it's Schwab or Fidelity or your local bank. So that's how that contribution is tracked, but it's reported to the government on the Form 1099-R. All right. We've been on for about an hour and 30 minutes today. So that's it for today's Solo 401k session. Thank you so much for investing your time with this. Your time is valuable and your future depends on it. If you haven't yet, please subscribe so that we can keep building this community. Until next time, have a great rest of the day.